Hello, and welcome to Macro Examiner. In today's video, we will cover a few charts, as well as discuss futures positioning in the Nasdaq 100, growth stocks outperformance versus value, as well as the liquidity backdrop experienced since the onset of the regional bank failures and the new liquidity phase expected to come once the debt ceiling is raised. Thanks for watching and enjoy. Here is a chart of futures positioning data for the Nasdaq 100 as of May 16, 2023. On the left-hand side of the chart is the number of contracts asset managers and leveraged funds are net long in the thousands, denoted in green. On the right-hand side of the chart is the price of the Nasdaq 100, which is shown by the blue line. Asset managers and leveraged funds are the most net long Nasdaq 100 futures since May of 2022, as the index has risen 25% year-to-date, with megacap tech leading the way. Another chart to highlight the drastic outperformance year-to-date in growth versus value factors. For the megacap tech stocks, first quarter earnings came in better than feared, and due to their fortress-like balance sheets, these stocks have acted as a safe haven for long-only investors and portfolio managers amidst the fallout from the regional banking crisis. The Federal Reserve aimed to address the regional banking situation by creating the Bank Term Funding Program and allowing banks to access the discount lending window. These measures to stem the problem resulted in the Fed balance sheet expanding by approximately $400 billion. This added liquidity has supported risk assets broadly since the onset of the regional bank failures in March. These emergency moves by the Fed, combined with the drawdown of the Treasury General account, has effectively sterilized the quantitative tightening program aimed at removing base money to reduce liquidity and thus lower inflation. Going forward, assuming the debt ceiling in the United States is raised, a new phase of liquidity will be upon us. The drawdown in spending of the Treasury General account leading up to the debt ceiling has been positive for market liquidity. Once the debt ceiling is raised, Janet Yellen will be tasked with refilling the Treasury General account. This is done by issuing new government bonds, which is likely to primarily drain bank reserves and thus reduce liquidity. At the same time, quantitative tightening is continuing on autopilot, with the securities held outright by the Federal Reserve continuing to decline, reducing market liquidity as well. As the market nears this period of liquidity withdrawal, the leading economic indicators for the United States continue to suggest a period of weakening growth and mild recessionary conditions. This, along with the next chart, are from the Conference Board's leading economic indicators data series. In the most recent update, U.S. leading economic indicators declined 0.6% in April 2023, following a decline of 1.2% in March. The leading indicators are down 4.4% over the 6-month period between October 2022 and April 2023, a steeper rate of decline than its 3.8% contraction over the previous 6 months. The leading economic indicators for the U.S. declined for the 13th consecutive month in April, signaling a worsening economic outlook, said Senior Manager Business Cycle Indicators at the Conference Board. Weaknesses among underlying components were widespread, but less so than in March's reading, which resulted in a smaller decline. Only stock prices and manufacturers' new orders for both capital and consumer goods improved in April. Importantly, the LEI continues to warn of an economic downturn this year. The Conference Board forecasts a contraction of economic activity starting in Q2, leading to a mild recession by mid-2023. This chart, courtesy of Earnings Whispers, shows the upcoming week of May 22nd is packed full of earnings reports for major U.S. companies. None, of course, as important as NVIDIA after the close on Wednesday. NVIDIA's stock has risen more than 100% year-to-date as the outlook for the company has improved given its involvement in artificial intelligence. Last week in regulatory filings, it was disclosed both Stanley Druckenmiller and David Tepper, among others, purchased the stock in the first quarter. Analyst estimates for first quarter earnings per share is 92 cents, while revenue is estimated to be $6.52 billion.